Welcome to part 4 of the video, which is more interesting part. And thanks to the statistics which is provided by this article, I have to admit one thing, which is if you carefully research on Google, you will get a lot of information. Of course, the information is not ready. You need to work. It is not a spoon feeding like you just opened the Google and you got what you're looking forward. Finding such articles are always tough, but yes, we should be thank you to few authors like we have this person, Mr. Ravinder Sonawane, that who are publishing very good articles in the public domain. We should be thank you to them and analyzing the whole information. Having said that, there is much information which hasn't analyzed, but still, most of the information is analyzed, and we should be thank you to them. Having said that, one important questions which I always raised is how come the loss-making companies are getting the funding? Are venture capitalists and private equity firms who investing heavily in these loss-making firms? And if you are thinking that I'm always using venture capitalists and private equity, then just wait for the time being. Just wait for the time being, and you will see that I am going to be exploring their structures also, which is called AIF structures, alternative investment fund structures, tax root structures. This domain, which means the structured domain, is currently in the hands of big fours. And you know how honest are big fours. It's only a matter of time that these structures will come into public. Please be rest assured. And it's an open challenge to venture capitalists and private equity firms. Let it be honest. So according to this data, API Holding is a biggest player in Indian digital healthcare ecosystem, owing business and brands like Named, Docone, PharmEasy, Retalio, and Thyrocare. Unfortunately, this article is not aware or not mentioned how much money API already spent on buying a brands like Named, Docone, Retalio, except Thyrocare. But amount must be huge because if Thyrocare is 4,546 crores, then whatever the name I mentioned, they would be very big, a huge amount. Who funded them? Who funded them? And why did they funded them? Is it there is a kind of conspiracy or a fraud which is going inside the system whereby, by the way, did you ever thought that from where these venture capitalists and private equity firms are getting the money? Have you ever been to the annual reports of these private equity firms? By the way, majority of these private equity firms are unlisted. Hardly few are listed. Hardly few are listed. But majority are unlisted. So that the relevant information never comes in public. But they forget it that I am from a banking domain. And being from a banking domain, getting an information, it's extremely easy. It's a matter of days. So venture capitalists and private equity firms, majority are getting the money from high net worth individuals, preferably family offices. Do you know, according to the public statistics, the family offices worldwide, whether it's a single family office, it's a multi-family office, or it's a hybrid family office, they own not less than 1 trillion worth of wealth. Not less than 1 trillion worth of wealth. And being from a banking domain, I'm telling you, this 1 trillion is a very, very underestimate figure. Not underestimate figure, very, very underestimate figure. Being from Singapore, being from banking domain, being interacting with banks and financial institutions almost on a daily basis, I knew that family offices owns humongous amount of money beyond counting. I repeat, beyond counting. So this 1 trillion figure which is quoted, this is extremely under-edged figure. But having said that, people trust that figure. Venture capitalists and private equity firms get their money from HNIs, high net worth individuals, and sometimes they get the money from, you know what I mean, and in many cases they get the money from family offices. It means that they do not own the money, and that's a hard fact which no one wanted to deliberate, but I deliberate in a matter of time, because I would be launching a series of video, of course, on our OTT platform, on our YouTube channel, whereby we would be talking it about the tax structures, offshore structures. Now, if a venture capitalist and a private equity firm is getting the money from high net worth individuals, is getting the money from family offices, it effectively means that they want return. My mistake, substantial return. Do you remember the death of Mr. Siddharth, the founder and head of Cafe Coffee Day, around a couple of years ago? He did suicide. He mentioned the name of two private equity firms in his letter. Nothing happened in India. Reason being, people don't have guts and the knowledge. I repeat, they don't have the guts and knowledge to came in the public domain. He clearly mentioned that the private equity firms expecting a pretty decent return from them, which, by the way, considering his business background, considering the volatile market, is impossible for him to give, though he tried. So when a private equity and a venture capitalist firm take up the money from HNIs, from these people, you know what I mean, from family offices, they demand extensive returns. And these extensive returns can only be possible provided there is a humongous activity happening in the unlisted space. Else it is not possible. How can it be possible? It means that when a private equity and a venture capitalist firm invest in a loss-making startup, whereby he borrow the money, he is supposed to give an extensive return. And that is possible in an unlisted market, which means the regulator is aware, completely aware, that the actual actions happening in the unlisted market. But rather than correcting this, I repeat, rather than correcting this, this mess is now a cancer. It's a billion-dollar industry in India. Like I said, no one is completely aware about the size of the unlisted stocks. No one is aware about the size of unlisted stocks. And no one would be aware about that. Please open the Google and see how many people dare to talk about unlisted markets. That is the bloody point. And it is not, that in case of API, Byju's is a live example of the fact that a company who is into losses, buying one company another after one company another continuously, and who is funding them? Is it the money is not routed via RPI? Is it the money is coming in India for Byju's? It is coming from air route? Just think about that. And you will get to know the stark realities of the unlisted market. Rather, now IPL is also a part of unlisted market. IPL companies have now valued as a unicorn in unlisted market. Come on. IPL companies are also unicorn. Just think about that. You will get to know something different about this. See you in the past part 5, whereby we would be covering about some interesting statistics. I repeat, interesting statistics about this company.